Hey there, welcome to your mortgage rate forecast with Criss, your mortgage rates and news. It is March 22nd, and let's get started with the news. Now, today bonds are up to about 102.45. As you probably heard yesterday, the Fed hiked the short-term interest rate a 0.25%. We're now at 4.75% on prime. China's central bank also followed suit and increasing their market rate as well. Now, as far as reports today goes, even though the FHFA report came out showing housing appreciation is up, and actually, guys, it's actually accelerating. So it's like housing isn't just going up, appreciation, but it's actually showing acceleration. So good news for housing, bad news for bonds. But jobless claims did hit and miss their mark today, and the Fed, when they spoke, they mentioned 3 more hikes this year. So that was bond friendly as well. As you know, okay, so let's analyze this just for a second. The Fed said they're probably going to hike short-term rate 3 more times this year, and it was bond friendly. So isn't that kind of oxymoron? If the Fed's increasing the short-term rate, why is that friendly to bonds? Wouldn't bond rates go up as well? Well, when the Fed increases the short-term rate, they're actually trying to slow down inflation. And when they try to slow down inflation, that's actually bond-friendly news. So anyway, that was actually very bond-friendly yesterday. And also with the whole situation going on with stocks, like you probably saw stocks are down today. Tariffs, the U.S. plans to punish China. And also with Facebook, causing some sell-off as well as far as that private data. So anyway, all in all, pretty good news for bonds today. Let's get going with the charts. Here's what we have. Going back to early January, bonds had that sharp sell-off, but now we're actually pretty mellow. Ever since late February, early March, bonds have kind of found their little plateau. So as you can see today, we're trading right in the middle of our trading range, which I believe to be about 102.75 to about 102.25. So bonds are looking pretty good, and yesterday's sharp sell-off did actually come back and recover. So to kind of quantify where we're at, in February, Freddie Mac reported that rates at 4.33%, and a consumer's paying 0.6 points to get there. Now that's when bonds were trading at about 102.90. Now we're about 102.45. So that's about 45 cents worse, which means, the average consumer for that same rate might be trying to pay something around a little over a point. So that's where we're at in the market today. Let's get to my forecast. Last projection was a hit. I won't lie, guys. I was a little nervous because the bonds were just selling off so hard, earlier in the week, or at least it felt that way. But the bonds did recover, come back, and so woohoo! The last projection was a hit. As far as the future projections go, the analysts are pretty consistent right now. They're all thinking we're going to level out, have some pretty flat trading, but they still are pretty bearish on the long term. And again, going back to that quantitative easing and that downward pressure we're going to see on bonds over the big picture in 2018. Here's my prediction for this next week. I believe bonds are going to be trading between about 102.10 to 102.75. We're currently trading at 102.45. So, if you like it, lock it. If you have the ability to lock in your rate, I don't think that's a bad idea right now. You could stand for the market to improve about 30 basis points, 30 cents, or the market to get worse by 35 cents. So, if you want to play the market, this may be a time to just kind of have some fun, as long as, nothing is really too critical for you. But if you like it, lock it. That's the best advice I can give you. But I think we're right in the middle of the trading range, and so it's really just going to end up being at your preference this week. Okay, that's it for now, man. We'd like to hear your comments. Leave your comments down below. Don't forget to hit that like button before you go. And if you want to subscribe, click that guy at the top left, and that will get you a little alert when we release new content, which is generally every Thursday. And if none of this made sense to you as far as the charts, like, hey, what are these bonds and how does that have to do with like rates and how does all this stuff work? Over at the top right, click on the Mortgage Bonds 101, and that'll help teach you the basics that you need to know when you're trying to figure out the best time to lock and how to get the best mortgage rate. Okay, guys, that's it for now. Have a great week. We'll see you next Thursday. Bye-bye.